This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Herb Greenberg, who reminds investors that risk is real. With Herb Greenberg's Reality Check, researching stocks in terms of risk. You can learn more at TheStreet.com/realitycheck.
Double play, the Dow and S&P end the month in record territory. What's next for stocks and bonds? We'll take a look.
Power portfolio. This week's Market Monitor has 3 energy stocks he thinks can get you at least 20%. Break out your notebooks.
And back to school, why Walmart is offering classes to students about life after high school. All that and more tonight on Nightly Business Report for Friday, May 30th, 2014.
Good evening, everyone. Well, it looks like sell in May and go away didn't quite work out this time. Both the S&P and Dow closed at new record levels today on this last trading day of the month. Stocks were lower for most of the day following a disappointing surprise on the economic front, showing consumer spending in April fell for the first time in 2 years as prices started to inch up. But despite that, the bulls persevered. At the close, the Dow rose 18 points to 16,717. That's an all-time high. The S&P 500 tacked on 3.5 points to 1923, also a record. The outlier, though, was the Nasdaq, which fell 5 points. But for the month, the Nasdaq was the best performer, gaining 3%. The Dow was up almost 1%, and the S&P rose more than 2%.
Well, despite the strong gains this month, many smart investors are more than a little perplexed. Stocks are up, but so are bonds, and it's not just because the Federal Reserve is buying them. So what's going on? Dominic Chu explains why this market has so many in a land of confusion.
The bulls and the bears are both sitting around scratching their heads. They're trying to figure out what to do in the current land of confusion. The bad news bears say that there's no reason for things to be as good as some would believe. If so, why are investors flooding into the safety of Treasury bonds? And there's no reason to be bullish on the economy. Some of the data coming out has been pretty much mixed at best. Then, if you're on the bull side of the equation, you're also puzzled by what's happening. After all, the S&P 500, it is at record highs. The Nasdaq is around 13.5-year highs, and stock market volatility is the lowest it's been in over a year. That should mean that things are basically good. We've got a market that everyone just loves to hate. That's the real read. But no matter what your position, next week could either lead to more clarity or more calamity in the markets. That's because there's a slew of economic data coming out, including manufacturing data and services data, and of course, the big monthly jobs report. And of course, a big interest rate decision coming from the European Central Bank, the ECB. So, buckle your seatbelts. Things could get very interesting next week for the overall market. For Nightly Business Report, I'm Dominic Chu.
Well, those stats don't worry Art Hogan. He's bullish on the economy and the stock market, and he's calling for the S&P to end the year at 2050. He's chief market strategist with Wunderlich Securities. So, Art, you know, this month of May, as Dominic was just talking about, there was a different story if you were talking about the S&P 500, a different story for the bond market, and a different story for the economy. How do things look for the rest of the year? Make your case.
Well, Susie, I think that's a very good point, and we have gone through a confusing time. But as we look ahead, I think one of the things that we can count on is the second quarter is going to be much more robust in terms of GDP growth rates than the first quarter was. And by much more robust, if we settle in where we are now, GDP in the first quarter is going to look like something like -1%. We expect that to increase to plus 3.5% to 4%. So think about that. That's 450 or 500 basis points in adjustment to the economy. I think that's going to percolate into both equity markets and probably start cooling off the bond market a little bit. So I think that's a big driver. And the things we're looking at in the economy that have been increasing steadily, like sales of homes, like industrial production, capacity utilization, like car sales, all point to a stronger economy in the 3 quarters ahead of us versus the 1 quarter behind us.
What's going on with bonds, Art, and where do you expect yields to end the year?
I think the bond market is reflecting something that's much more technical than it is fundamental. I just think there's a supply and demand imbalance. I don't think we're issuing as many quality bonds. The government certainly isn't issuing as much. I think there's pensions rotating, into bonds and out of stocks after massive gains last year. And I certainly think there's a short squeeze and a very crowded short trade. So I'm not as concerned about that. I expect the yield on the 10-year to be closer to 3 and change than to 2.5 or less than 2.5, where we've been spending some time for the last couple of weeks. So I think that as we normalize in the economy, I think bonds will probably normalize at rates that are above 3 and closer to 3.5 by year end versus where we stand now at 2.5.
Art, you've given us 8 stocks. That's a lot. 8 stocks that you're recommending to your clients. 4 of them are in the energy area, oil and gas production companies, and the other 4 are in regional banks. A lot of them are not household names. Just tell us, what is the theme here? Why do you like them generally?
Sure thing. So in general, on the 4 regional banks, the simple one-liner here is that in all the regional banks we look at, and we look at hundreds of them across the country, one thing that's consistent, we're seeing loan growth. That's very important. It's new to the cycle, and it's higher than the average. And we're seeing stable net interest margins. And that just basically means these guys are making money, and there's demand for their products. It won't take much of an uptick in interest rates to see the net interest margins expand. There's a lot of M&A activity going on. There's a lot of solid balance sheets. I think regional banks are a great play. The 4 that we gave you are some of our favorites. On the E&P side, I think there's an energy revolution going on. There's no secret to that. It's been in all the papers, and there's some great shale plays across the country. We picked 4 E&P companies that are our favorites there. And the things that the 4 companies have in common that we pointed out to you is very similar. They're in the right location, so they're in the right shale plays. They're terrific operators, and all 4 of them are currently trading at a discount to their fast-growing peers, and most of them are growing production at a rate faster than their fast-growing peers. So you're looking at bargains in what we think is going to be the most important sector in 2014 and 15.
Art, I want to mention the names of those companies that are on your buy list: Center State Bank, Resonant, First Financial, and Hancock Holding. Also in the energy area, you say Gulfport, Resolute Energy, Matador Resources, and good old Bill Barrett, whoever he is, he's going to do just fine. Let's talk a little bit about one area that you do not like, and that is gold. Very quickly, 20 seconds, why?
Yeah, you've seen a collapse in gold, and I think that part of that was a big play and a flight to safety. And this is not a new move. We're from 19 down to 12 and change. I think we're going to see 1,000 before we see 1,300 again. And I think that's the dynamics of that marketplace. I don't think there's that flight to safety in the gold market much longer.
All right, you've given us a lot to think about for the second half of the year. Thanks so much, Art. Art Hogan with Wunderlich Securities. Have a great weekend.
Oil prices continue to hover around $100 a barrel. One issue not helping production is plunging in the North American country of Libya amid a civil conflict there. It prompted the State Department to say this week that any Americans in Libya should leave immediately. Even though Libya's future is uncertain, the world is watching a conference being held in London to persuade international oil companies to invest in the country. Michelle Caruso Cabrera is there, and she says it is a tough sell.
3 years after the fall of dictator Muammar Gaddafi, the country of Libya is racked by violence. Competing militias taking over oil facilities, shutting down ports, and even trying to sell stolen oil themselves on the international markets.
It's pretty depressing, really.
Geologist David Boot is one of the presenters at a conference in London this week, endorsed by the Libyan National Oil Corporation.
When the Arab Spring happened, I felt sure somehow myself that Libya was the one place it might work, because it has a small population and very, very large oil reserves. You compare that to Tunisia or Egypt, where they have very large populations and comparatively small oil reserves. They don't have the resources, but Libya had these tremendous resources, and now they're all squabbling over it.
As a result, oil production seems to fall by the minute, now at only 165,000 barrels per day, down from more than 1.5 million in 2012. Analysts say the loss of nearly 1.5 million barrels of oil from the international markets every day is one reason oil prices remain stubbornly high. The most recent turn of events, a former general who has amassed a small army and is trying to rid the country of Islamic extremists. In a phone interview, he told me if he's successful in stabilizing the country and ridding it of terrorists, he will then call for elections. Some believe the general may be supported by the CIA because he lived in exile in Virginia for nearly 20 years after being involved in a reported failed coup attempt against Gaddafi in the 1980s. In our interview, Haftar denied any outside support from any country.
Welcome to the third New Libya Oil and Gas Forum.
In what turned out to be a case of bad timing, the Libyan Oil Corporation today finished up a 2-day annual conference in London designed to entice international oil companies to invest. It was a hard sell.
There's no way that any company can actually operate there at the moment and not worry about getting killed.
Nassam El-Bordi is Libyan and chairman of an oil services company.
We've got some problems, but however, I believe that these problems are expected. Building a country from scratch, because that's exactly what we're doing in Libya. We've had no institutions, we have no constitution, we had no army, no police force. So everything had to be built from scratch. And obtaining freedom and democracy is not an easy task.
One geologist in attendance told us if Libya could regain stability and investments, it could quickly be producing as much as 2 million barrels of oil per day, which could potentially help to lower oil prices. For Nightly Business Report, Michelle Caruso Cabrera, London.
The first shoe has dropped in the mismanagement scandal engulfing the Veterans Affairs Department. Today, President Obama said the head of the agency was out.
A few minutes ago, Secretary Shinseki offered me his own resignation. With considerable regret, I accepted.
John Harwood joins us now from Washington with more on this story. So John, I guess now the search is on for a new chief of the VA, and given all the problems there that have been going on for decades, all the dysfunction, what's the key skill he needs to have in your view?
Well, I think you're going to need a high-energy leader and somebody with tremendous management skills. Sloan Gibson, the acting secretary who was put in place today by the president, somebody who's been running the USO, multi-generation military family, somebody who also has a master's of business administration, so he's got management skills, but they're going to look for somebody permanent and get on the job. And that job is so important given the political pressure that's been mounting and the revelations of the difficulty in care. The president said today he simply couldn't afford any more distractions by having Shinseki take so much fire. Here's the president.
He has worked hard to investigate and identify the problems with access to care. But as he told me this morning, the VA needs new leadership to address them. He does not want to be a distraction because his priority is to fix the problem and make sure our vets are getting the care that they need.
So, John, what kind of fixes are on the table here?
Well, one of the fixes, which both parties are discussing, are ways to expedite accountability for members of the VA bureaucracy, many of whom are under civil service protection. Dianne Feinstein, senior Democrat in the Senate, just came out with a statement, said it's unfortunate that Eric Shinseki had to leave before he was given the tools to reform. You need new authority in Congress, and Democrats and Republicans are both talking about giving the new secretary some authority.
Mm-hmm. And some people have said it needs more money, more funding. It's underfunded, but I've seen that the VA budget has tripled in the last decade or so.
The VA budget has increased, and of course you'd expect that given the surge of veterans coming home from these two wars that we've been fighting. But one of the things that's been discussed, the president today talked about a surge of doctors to service some of the people who've been waiting. Others say if you've been on a wait list for a certain time, the federal government ought to pay for private care. We'll see what solutions get finally enacted, but you can bet that there are going to be some changes.
And we're going to keep talking about those changes, too. Thanks a lot, John. John Harwood in Washington.
Coming up, want double-digit gains on your stocks? Well, this week's Market Monitor says he's got just the thing for you. 3 power names he says will be 20% winners.
Walmart, the world's largest retailer and biggest employer in the United States, is heading back to school. Courtney Reagan shows us how the company is offering high school students a new way to look at retail.
When it comes to retail, this may come to mind as the only career big box stores have to offer.
How are they going to get merchandise together?
But at Scarborough High School in Houston, Texas, that perception is starting to change.
There's this perception of retail out there that it is a go-nowhere job, that it doesn't pay well. So why would a parent say, hey son, hey daughter, have you ever thought about going into retail? That doesn't happen because it's the perception that we have to change.
Tracy Davis is with the University of Houston downtown. He's behind this pilot program aimed at teaching high schoolers retail is more than just ringing a register. The 4-year class is called E-Tail Retail and has the support of retail giant Walmart, which has set up a retail lab at the school and provides students with hands-on training at area stores.
What does this table make you think of here?
We tell them as long as they've got a smile on their face and they've got the ability and the desire to work hard every day, they will have a very successful career.
A career in anything from logistics to marketing to store managing. Jobs high school junior Ramon Cardanes never realized were involved in retail.
I had no idea about retail. The huge amount of jobs that are carried.
Also a surprise to the students, the potential pay, upwards of $150,000 a year for big box store managers.
All around us, we have perfect examples. People started out from scratch, from nothing, from pushing cars to becoming a manager, to becoming a store manager, to eventually moving up the scale to corporate level. I mean, it's amazing the opportunities you can get here.
Maybe I could start my own business since I already have so much insight on retailing. Is big or even bigger than Walmart.
Lofty goals from students with more confidence and knowledge to take on the world of retail. For Nightly Business Report, I'm Courtney Reagan.
Call it stumbling out of the blocks. That's where we start tonight's market focus. Shares of the network equipment maker Infoblox were hammered today after the company warned its profit for this quarter would be lower than expected because of contract delays and a slowdown in orders. The company's CEO is also stepping down after 10 years at the top. Shares of Infoblox down 37% to $12.96 today. But a positive outlook sent shares of Ann higher today, despite weaker than expected earnings. The parent of Ann Taylor and Loft Brands raised its second quarter revenue forecast, saying traffic picked up in May following that severe winter. Shares of Ann up 4% to $38.87. Valiant Pharmaceuticals upping its offer once again for the Botox maker Allergan. That's the second time this week. Valiant says it's now going to offer $55 billion in cash and stock, up from $49 billion. The bid values Allergan shares at more than $179 each. Today, shares of Allergan were up almost 6% to $167.46, while Valiant also ended higher, up 1.5% to $131.21.
Meanwhile, also in the drug industry area, UK drug maker Shire is reportedly considering a cash offer of more than $4 billion for NPS Pharmaceuticals. NPS is a specialty maker of drugs for rare diseases. For its part, NPS says it has not been contacted by Shire. Nevertheless, NPS shares jumped more than 13% to $31.13. Shire fell a fraction to $173.39. Well, the ongoing saga between Men's Warehouse and Joseph A. Bank appears to be winding down finally. Shares of both companies got a bump after the Federal Trade Commission approved the merger of the two men's clothing stores. Joseph A. Bank up more than 1% to $64.95. Men's Warehouse spiked 3% to $49.78. Home improvement company Lowe's is hiking its dividend nearly 28% to 23 cents a share. The dividend will be paid on August 6th to shareholders of record as of July 23rd. Now, the company has declared a dividend every quarter since it went public in 1961. Lowe's was up a fraction today to $47 and change. While Lowe's is hiking its dividend, Mack Cali Realty is cutting its. The real estate investment trust is slashing its dividend in half to 15 cents a share. Shares of Mack Cali fell almost 1% to $21.75.
Our market monitor tonight is cautious, especially compared with our prior guest, Art Hogan. But that's what makes a market, after all. Charlie Smith expects stocks to be flat for the rest of the year. He says, though, that investors can still make money, and he's going to show you how. He's Chief Investment Officer at Fort Pitt Capital Group and also Portfolio Manager of the firm's Total Return Fund. Mr. Smith, welcome. Good to have you with us.
Thank you for having me.
Our earlier guest, Art Hogan, has a year-end target on the S&P 500, about 100 points or more above yours. You see it basically flat, 1938 or thereabouts. Why the divergence? Why the different opinion?
Well, I think the big issue is earnings, where we think earnings are going to be. Our estimate for earnings for the S&P 500 this year is about 5% under the consensus. You put a 17 multiple on our $114 earnings number, that gets you to 1938. I have a feeling that ART's number is probably a little bit closer to consensus than ours.
Mm-hmm. You've said that you have a couple of stocks in the energy space that you think can improve by 20% or more over the next year or so. So let's find out why and which ones. What's the attraction with Kinder Morgan, which has been kind of stuck in the $30 range most of this year?
Right. Kinder Morgan is a very large energy pipeline and oil and gas pipeline company. They have 80,000 miles of pipeline in the U.S., the biggest in the U.S. 25% of the stock owned by Richard Kinder, who's the CEO. Really, the opportunity here is to take advantage of moving all this shale gas that we're producing at record levels in the U.S. over the last 6 or 8 years. And the opportunity for Kinder is yield. They pay a 5% dividend, and the company says that they're going to grow that dividend to the tune of 3 to 5% per year over each of the next 2 or 3 years. So we think the stock could move up to $40, plus you're getting a 5% dividend yield while you wait.
Your second choice is Chart Industries, but as you point out, candidly, it is down from about 130 into the 70s now. What's the catalyst going to be to turn this stock around?
Well, we've been patient with this one. We began following a couple years ago under $100. It got to 130, as you said. It's now back in the low 70s. They should earn around $4 next year, maybe $5 the year after that. They've seen a slowing in their growth this year, partly due to a slowdown in business in China. They're a big overseas operator. But their main business is infrastructure for natural gas processing and natural gas transportation, and that business is growing quite nicely. So I think there is a growth opportunity here. The stock symbol is GTL.
Okay, it seems like we just had a little technical problem there. That was Charlie Smith with Fort Pitt Capital Group. And his third stock, by the way, was Axiall, AXILL, which is trading on the NYSE. Coming up next, Microsoft's former CEO slaps a $2 billion price tag on the LA Clippers, but he's not the first billionaire to covet a franchise. We take a look at why sports teams are becoming a plaything for the ultra-wealthy. That's up next.
Madison Square Garden is on a winning streak, shares rising for the 11th day in a row, the longest streak since it spun off from Cablevision. That was 4 years ago. The stock got a pop today after the New York Rangers, which MSG owns, advanced to the Stanley Cup Finals last night, along with word that the Los Angeles Clippers basketball franchise could sell for $2 billion. That kind of price tag would bode well for MSG's marquee teams, the Rangers and the Knicks. Shares of MSG up 3% on the session today to $54.86. All right, that'll do it for Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks so much for joining us.
And I'm Susie Garib. Have a great weekend. Tyler and I will see you back here on Monday.